Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 14th of January and Friday, the 15th of January, 2016. We usually do a combined preview for Thursday and Friday here since Friday tends to be wrapping up the week and everything we've been talking about is already happening. So no need to do a new preview for tomorrow night, especially since Friday is a couple things. It's options expiration, which tends to be slow, and it's also the day leading into a long weekend. Which means a lot of people will be heading out Friday. So I would anticipate Friday to be fairly uneventful. Having said that, nothing uneventful so far about this year. So here's a look at the ES front month futures contract. Down day. This is the daily chart on Wednesday. We are now we were 9 bars down. New startup phase completed, and that's on the futures. We've done that on some of the other indices already. So we'll see if that means anything, but certainly in terms of the action on Wednesday, it was a gap up and sell-off, and it got pretty ugly late in the day. So here we are now, believe it or not, back near the August and October lows, that double bottom sort of that we formed in October. Technically, the second bottom for a double bottom should have been lower. But this is, let's see, there's only 1, 2, 3, 4 days in there between all of last year that closed lower than where we just closed today. So keep that in mind. A lot of people on edge right now. This is a scary, precarious place for the market to be. Meanwhile, not for gas at the pump, but maybe gas industry in general, oil industry in general. We're 9 bars down yesterday. New startup phase completed there. Not that that's meant anything to oil. Closed at $30.57.5. That's the second lowest close. It was up a dime from the prior day's close. S&P cash index down 48.4. We'll look at the intraday setup for that in a moment. Gold climbed a couple bucks, $8.10. NASDAQ 100, the NDX down 150.6. This one, if I go to projection mode, like here, this is now 9 bars down as well. So we've got 2 9-bar down setups, meaning there could be an exhaustion and maybe time for a reversal, but hard to see how you're going to get a reversal going into options expiration in a long weekend. And also, I think today was something a little different off the beaten path. But if you look here in October, you will notice that there was a 9-bar down setup that caused the bottom in October before the 9-bar setup the other way in November that caused the top. So these things do have meaning, obviously. So we have to just be aware of that, but we still trade whatever the market does directionally. Stocks down 19. That's also got a 9-bar startup if I go to projection mode and count today's candle. That is some ugly stuff there, almost to the lows from October as well. And here's the one that's got everybody concerned. Biotech's new closing low, nice inverted cup and handle breakdown, or cup breakdown. We talked about that for the last couple of days. That did not look pretty, and it still doesn't. Got the VIX up $2.75 to 25.22. Got to tell you, that's interesting that we did not take out the highs of the last few days, given the action today. It leaves a lot of room to the upside on the VIX, unfortunately. Trend closes at 1.32. That puts the 10-day moving average at 1.51. Doesn't give us a lot of information. NASDAQ volume almost 2.3 billion shares. Almost the best of the year so far, but we've definitely had solid volume. And you notice now that the, let's see, 1, 2, 3, 4, 5, 6, 7, 8 days into the moving average. So there's only 2 days left in the moving average, the 10-day moving average of volume, that are still back in the last week of last year. We're down near that 1.2. So the 10-day moving average has already jumped to 1.9 billion shares. We talked about that. Just get past the holidays, things get back to normal volume again in January. Advanced decline ratio. Now, I'm going to show you the 5-minute chart of this in a minute. Here's the daily chart. We closed negative 22.46, one of the lowest closes breadth-wise on the NASDAQ advanced decline ratio. And here's a look at the New York. Again, lowest since mid-September, negative 23.85. What's the most interesting about this, though, is if you go to the 5-minute chart and look at today, we started plus 1,200 early on, almost to plus 1,600. This is a complete meltdown in the market, complete reversal to get down to this low of an advanced decline ratio. And here's the NASDAQ side in that same 5-minute look. I mean, again, up plus over 1,800, 800 more stocks positive than negative out of the gate on a gap up, and then just boom, they just completely destroyed the thing. That is a wrecking if I've ever seen one. Google, back to the daily charts, down 25.77, puts it right on. Look at that, the close is right on that red static trend line. Isn't that interesting? I think we lose that in the next day or two. Apple, low range base set up for a breakdown here. It's almost a bear flag. Nothing positive about that Apple chart at all. Just got completely stuffed by the 10-day moving average there. Amazon down 36.08. Ugh, look at that sell signal we had back there. Just perfect for Amazon. Netflix even starting to roll over after being positive the last few days despite the market. Down 10 today. Nothing pretty. All right, here's the ES and 5-minute candle. So again, you can see the gap up. Pretty much put us right at the highs of Tuesday. Came back down after, it took about 15 minutes of wiggling, finally picked a direction to the south. Filled the gap exactly and paused, went into lunch like that, and then over lunch just sold off. Now, this is an options unraveling move. We talked about this yesterday. Wednesday of options expiration week. You look after the first hour's play, you mark where the market is at that point. We had not yet filled the gap there. And if you pick a direction from that point and volume holds up, which it did, it actually improved in some ways throughout the day. That is your options unraveling move. It will usually mean that the market will hold that direction all the way into the close, and we basically closed at the low of the day. So that's how options unraveling works. You find it, you get it, you don't fight it. You don't spend your life on the long side of the market on a day like today. NASDAQ side, here's that is obviously ugly, ugly, ugly. Complete negative, bearish, engulfing day compared to the prior session. Ugly. All right, so what does that mean for the rest of the week? Well, like I said, this is options expiration. After the market moves down the way it has over the last week, you almost would expect the options unraveling move as they close out the profitable positions. You don't close out the ones that are out of the money, to take the market upwards, and it did not. Today was down. So that is very, very much a net negative for the market here going forward. Data for the rest of the week, there's a lot. Thursday morning, tomorrow morning, initial and continuing jobless claims. That's the weekly number an hour before the bell, along with import-export prices. And then an hour into the market, the weekly natty gas number. Friday, retail sales and PPI and Empire Manufacturing an hour before the bell. Capacity utilization and industrial production 15 minutes before the bell. Michigan sentiment and business inventories 30 minutes into the market. I would say that's enough data that maybe something will move early Friday. And again, after the first 90 minutes or so Friday, you're probably going to hear the sound of everybody leaving the building, heading out for the long weekend. We are closed on Monday. Markets are closed for MLK, so we will resume trading on Tuesday. I will tell you, in case anything goes on in the world, it usually doesn't happen just over the market by itself. It's usually when there's something going on in the world. But the time that the market has the least protection on it, because the puts and options are retired, is options expiration weekend, which is this weekend. So if we do just sell off Thursday and Friday and put everybody into new lows for the last year and in panic mode, that is not good for next week. Plus, you have a 3-day weekend. Anything goes wrong in the world over that weekend, I think the market's going to be in a bad place for it. So really, really interesting to see what's going on here. You almost have to hope that 9-bar startup phase being completed on the ES and the NQs is enough to give us that bounce and take us back up a bit the next 2 days to calm everybody down before you go into that options expiration weekend. It's going to be some exciting stuff, I would think, Thursday especially, maybe Friday, a little bit early. Hope to help you out in the Trading Lab. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Charts, as usual, brought to you by eSignal 12. And if you do find these videos useful, please like them on YouTube. It does help us out. Have a great rest of the week. Have a great, safe 3-day weekend, and we'll talk to you guys on Tuesday.